Welcome back. Yeah, this is the second video that handled a practical solving of change of accounting date. Now, all that we have learned in the first video, we are going to apply it here to solve this question together. So stay around. Let's do it. Now, this question is getting from the ICAM pack. You can go to page 284, skills level illustration 18.7. That is where this thing coming from. So it's coming from the ICAM pack. So I know many of you might see there, you don't know how the thing, the dates there, how they solved it, but just stay back. We are going to solve it together and you are going to love it. You are going to understand it. So let's wait. Illustration. It's a Olowo, 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 Lekemo, Lekemo Limited. For many years, don't mind me. Olowo Lekemo Limited. For many years. Prepare account to 31st December, but in 2009, decided to prepare a 16-month account to April 30th. The adjusted profit as follows. 12 months to December 31st, 215. 12 months, 216, this figure. 16 months, April 30th, 218, this figure. And 12 months to April 30th, 219, this figure. In accounting, they will always tell you required. So look for required. Compute the assessable profit for the relevant year of assessment. Now, what is the relevant year of assessment here? The relevant year of assessment here are 1. Change of accounting year, the year in which they change the accounting date, and the other 2 subsequent year, they are the relevant year of assessment. That when you hear relevant, they are those year they want you to get. Now, let's go. So here now, somebody that watched the first video will be saying, I'm not seeing year end here. I'm not seeing year end here, and there's no period here. How do I know using the method I taught you to identify? Now, listen. 12 months represents year end. I told you in the first video that wherever you see year end, that means it's 12 months. Wherever you see period, that means it's less than or more than 12 months. So this is year end, this is period, this is year end. So don't panic. Now, somebody is saying that I can identify the year of change here. He wants to use the second method I use, which says 215, 216, 217 is not here. 218, that means 217 is the year of change. Yes, you are correct. 217 is the year of change because 217 is missing here. How is we have 217 here, then the period where you see period will become the year of change. But notwithstanding, after knowing that this is the year of change, and somebody says, can you, why is it, you just, I know that this 217, you say, why? You cannot explain. So we're going to revisit that again. How to identify the year of change, so that will solve. Now, what I will do, I will just fold here so that we'll concentrate on the figure here. Yes, so that we'll concentrate on the figure here. Now, before we start, I would like to, let's check how to identify the year of change. We've solved with one method. Let's check the second method now. Here, 12 months to 31st December 2015. You have 31st 12 2015. That means they started the account 1st January 2015. The second year, they maintain the same account, 16. 16, they maintain the same account. We want to check the year at which they change the accounting year. We've used the first method to identify because the year that is missing here is 2017. 2017 is our tax year, is the year of change, and is our tax year. Now we want to use this method. If somebody say why, then you use this method to explain to the person. Now the third year, now you see, instead of them to prepare normal accounting period to 2017, they now decided to prepare 16-month account, which is 1st January 2017 to what? April 30th. 30th April 2018. So the year at which they fail to prepare the account is 2017. Instead of them to prepare the account to this, they stubbornly prepare to this. So 2017 becomes the what? The year of change. The year of change, which automatically becomes your what? Your tax year, which you are going to use to compute your old date and your new date. And the two subsequent years will now be 2018, 2019. These are the relevant years that they ask us to prepare. Now, let's solve. Since we've gotten our year of change, now let's solve. Hope you are with me. We are moving together, right? Good. Very simple. Very simple. It's very simple. Very, very simple. Now, please don't forget to write the heading. For example, please don't forget to write the heading. I noticed I've not been writing there because I just needed you to get the basis here. Don't forget to write the heading. So here now the year of change is what? You write year of assessment, basis period, and the profits. Now, what is your year of assessment? The year of change is 2017, which become your tax year. Now, 2017 will assess what? 2016. 2017, in the year 2017, they will now assess 2016 year of account. And 2016 year of account is what? Sorry, based on the old date, we are using the old date first. But please always specify the old date. Where is the old date? This is the old date. The first date they started with before they changed. This is the old date. Now, 2017 will assess 2016, and this is 2016. 2016 starts from 1st of January to 31st December. So, basis period is 1st January 2016 to 31st December 2016. How much? 240. You are done with that. Then you go to 218. 218 will assess 217. Now, mind you, 217 is embedded inside the 16 months of account. And what we are looking for, 1st January 2017 to 31st December 2017. And this month is what is embedded in this month. So from 1st to December is how many months? 12 months. So we're going to say 12 over 16 times 3 36 will give you what? Times, to give, please use your calculator to confirm the figure. To give you 252,000. Sorry, you're not seeing it. Oh, forgive me. Now, to give you this. Now, we have extracted 12 months out of this 16 months here. Now, the next year is what? 219. And the basis period we're looking for there is first 218 to 31st 12 218. Now let's look. Where can we see 218? 218 is here. Remember, out of this 16 months, 12 months, we've removed 12 months, which is from 1st to December, from January to December, which is 12 months. Now it is remaining 4 months that entered 218, which we are going to remove here now, because this one is starting from, we are going to remove first 218 to 30th April. Hope you're seeing it. 218, which will now be what? 4/16 times 336. That will give you how much? Use your calculator. It will give you what? 84,000. You put it here because the month is not complete yet. Now we are looking for, which month are we looking for? 1st May 218 to 31st December 218. This month now will complete it 1 year for us. Are you getting it? Now from May to December is how many months? I think it's 8, 9, 10, 11, 12, 8 months. Count it. It's 8 months. Now let's come back here. Mind you, we've exhausted here. Now this is 12 months from here. Now this month ends here, April 218. That is to say, here is starting from May 1st 218 to what? 31st December 218, and continue from 1st April, from 1st January 219 to 30th April 219. And here, what are we looking for? We are looking for 1st May to December, which is how many months? 8 months. You say 8 all over 12 times 144. It will give you what? If you times it, it will give you 96,000. When you sum it, it will give you, when you sum it, please confirm this figure. Use your calculator. It will give you 180,000. So we are done with the old rule, with the old date. So let's sum up. 240, 252,000, 180 will give you this is 672,000. Old dates. Now the tax authority will solve this and keep it and say, let's solve for new dates and see if we're going to choose that of the new date. I hope you understand this one. Oh, my video is blurring. Sorry. Thank God it's okay. I hope you can see this. You understand how we solve this. This is the old date. Now let's solve for the new date. Let's solve for the new date. Let's solve for the new date. New date. Let's solve for the new date. Let's solve for the new date. So I'm trying to arrange something good. Year of assessment, basis period, and profit. Please always put your heading. Locomo, always put your heading, please. For example, purpose. Now, our year of change is what? 2017. Sorry, what is the new date? The new date is, now, easy way to know the new date is this. You can picture it from here, but it might be difficult for you. Now, immediately after they've changed the date, after the period, you check for the next line and pick the date there. Now, they end this account here. To pick it back to the next 1 year, where they started from, you can pick your new date from here, which will be 34 to remove the date 30th April to 1st May. Now it depends which year now to put. It depends on the year of assessment. The change of year is 2017. So 217 will now assess 216. There you come here and put 216. So this is your new date. Hope that is okay. Good. If there's any question, don't fear to put it on the comment section. Let me respond to it. Now, 217 will assess 216. And here, where is 216? We have 216 here. And the new date is carrying first, excuse me please, sorry for that. 1st May 216 to what? 30th April 216. Oh, this thing is wrong. Here it ought to be 215. 215, sorry. 215. Because 217 is assessing 216, and 216 date started from May 217 to April 216. I hope you get that. Now, we want to look the amount that if you check this date is 1 year. Let's check May to December. Now, this is what we're going to look for here. 1st May 215 to 31st December 215. Now, if you check it, where can we see that? Let's check 215. We have 12 months here that run from January to December, but we are looking for May to December. And if you check May to December is how many months? 8 months. May, June, July, August, September, October, November, December is 8 months. There you see 8 divided by the total number of months here, which is 12, times 180. Hope you are with me. Times 180. It will give you what? If you times it, it will give you 120. Now, how many months we are looking for? How many months now? 4 months. And the 4 months we are looking for is from 1st January 2016 to what? To 30th April 216. Right? Now, where can we see that? 215, we've exhausted it from May to December. Now, 216, you find out that it's 12 months. And we're looking for January to April, which is inside here. So that is 4 divided by 12. 4 divided by 12 times 240. 4 divided by 12 times 240 will give you, this time this will give you 80. Yes, will give you 80,000. So we'll have 1 year here complete for 217. I hope you are getting it. Then if you sum the two, they are going to give you what? 200. We are done with 270. Let's go to 218. 218, the basis, the date there is 1st, 5th, 216 to 31st. April is 30th. 30th April 217. Because 218 was S 217. Now, let's look. Now, here now, we are looking for what? 1st of May 216 to December 216. You understand? To December 216, this is what we are looking for. 216 to 30th, 31st December 216. This is the date you are looking for. How many dates? 8 months. You are looking for 8 months. Then if you watch 216 here, you find out that earlier we used 4 months from here. You understand? Many 8 months. So we want to use the 8 months because the 8 months fall under the date you are looking for. Then you come here and say 8 divided by 12 times 240. I hope you are getting it. 8 divided by 12 times 240 will give you 160. We've gotten 8. How many months is remaining? 4 months to make it 1 year. And this 4 months now is 1st January 217 to 30th April 217. And if you check from our question, you find out that 217 is embedded in this 16 months. 217 is embedded here. And we are looking for 1st to April 217. And from 1st January to April is 4 months. So here we will say 4 divided by 16 times, hope you are seeing it. What is the profit here? 336. You understand it? 336. So in 280 we now have 12 months. 8 plus 4, 12. So 4 times this will give you what? 84,000. Sorry. Please confirm with your calculator. When you sum it up, it will now give you 244,000. Hope it's clear. Hope you are getting it. Hope you are getting it. Now we are done with 218. Let's go to 219. The date is this 217 to 30 for 218. 219 versus 218. Now let's check here. Now 218 is here, Mind you, we removed from January to April 217 from here. From January to April 217 from here. That gave us this. Now we are looking for May to April. Now, if you discover, you find out that from January to April, it's 4 months. And here we have 16 months. And here we're looking for what? 12 months here. 16 minus 4 will give you what? Will give you 12. And the 12th month is embedded here. That is from May to 30th April. So here you say 12 months over 16 times 336,000. I hope you are getting this. If you times it to give you 252,000. So we are done with it. So let's sum up this, and this, and see what it will give us. It's going to give us 200, 244,000, 252,000 equals to 696,000. 696,000. This is the what? The new date. Now, as tax authority now, let us compare the one we're going to choose. Because the tax authority will be the one to choose. Now, this is the old date. This is the old date. Hope you can see it. Old date and new date, yes. This is the old date and this is the new date. Now, the old date is giving us 672,000, while the new date is giving us 696,000. Remember, the law said that we should compute based on old and new. Then we will now choose. If you are the tax authority, which one are you going to choose? You definitely choose the higher figure, which is the new date. So that is all about changing accounting date. I hope you understand this. I hope you understand this. If there's any question, don't fear to ask me. Don't fear to ask me. Don't fear to ask me. It's very, very simple. You just require patience and understanding. You get the techniques. Thank you very much. Thank you very much for watching, and may God bless you. I await your question. Thank you.